Hey everybody, it's Michael Wagner, one of the co-founders here at Omnia. I wanted to take some time today in this edition of Consider the Source to talk about why long-term investors should not be fearful of a recession. Now, I watch the financial news media, read the paper, talk to a lot of people, and I'm hearing a lot of fear around a recession. Now, I get it. Recessions have a very human cost. Companies shut down, people lose their jobs, and that's very scary. And hopefully you have a good emergency fund built up to prepare for a sudden, unfortunate occurrence like that. But for your investment portfolio, I'm here to tell you today that the recession is not the end of the world. It's not Armageddon. We're going to be okay. The fact is, recessions are a part of our business cycle. We've yet to find a way to repeal the business cycle, and recessions are a fact of life. They are inevitable. So we're facing one now, and I think one of the reasons there's so much fear around the recession is the one we all think of as happening most recently was the 2008-2009 Great Recession, which had a lot of characteristics that were really unique to that particular recession, and it hopefully was a once-in-a-lifetime event. There's a good chance that we're going to see a recession this year or next, but our expectation is that it's more in line with recessions of the olden days, where it is more of a pause, a step back in the economy, but really so that we can take multiple steps forward and be stronger for it. Think about it very similar to an old forest. There's a lot of dry underbrush, and it's ultimately not that great for the health of the forest in the long term. Every once in a while, you get a good forest fire, and it clears out a lot of that excess and really allows the forest to thrive and survive in a long-term sense. And that's what we would get out of a recession. So some things we're keeping an eye on, right, to see, okay, is it safe to dip our toe back in the water as far as investing goes? We'd want to see potentially a recession actually happen, right? We want to flush out a lot of that excess. And we would see that if we saw an uptick, even more so than we've already seen this year, in defaults in the credit market. We certainly have had some, but not to the extent that we feel would really clear out, like I said, a lot of the excess from the system. We pay some attention to valuations, right? If you look at the 30-year Case-Shiller PE on the S&P 500, it's still above 30. And that is certainly not cheap territory when it comes to long-term valuations for equities. We watch the yield curve a lot, right? So you've probably heard lately that the yield curve is inverted. You may have also heard that the yield curve has predicted 11 of the past 9 recessions. So it's kind of a hyperactive indicator, but still one worth keeping an eye on. So we'd like to see that yield curve flatten back out and potentially steepen so that you're being paid more to lend money for longer periods of time than shorter, which is the way it usually works. Another thing you might want to take a look at are analyst earning projections. We really haven't seen a lot of analyst downgrades thus far, so we'll continue to keep an eye on that. So that's kind of it for today in terms of what a recession means for your investment portfolio. I'm saying not much because they're a fact of life, they are inevitable, and it's so hard to time these things, to pick the exact bottom of the stock market, given the recession going on and all that, and really having the foresight and the courage to be able to go in at that exact moment. Really think it's much better to sit on whatever changes you've made on your asset allocation in the last several months, and now is still more of a hunker time and wait. You can keep an eye on those indicators I just mentioned. And if you tune back in, I'm going to do another video on things that tend to do a little bit better in recessions than some other investments. So I obviously encourage you to check that out. And if this topic interests you, I'd encourage you to look up a video that Alon and I did called How to Construct Your Portfolio. So please check it out. I want to thank you, as always, for spending a few minutes out of your busy day to spend with me as we